Welcome back to the Deep Dive. Today, we're diving into the world of Microsoft.
Yeah.
You guys sent us a pretty fascinating report from Morningstar dated December 6th, 2024.
Yeah.
All about Microsoft. So we're going to unpack that
That's
today.
very interesting.
We're going to be looking at, their earnings, getting an expert perspective on their future, and really exploring the big question, is their stock a good buy right now?
Yeah. You know what I think is really cool about this report is that, it doesn't just give us like the hard data.
Right.
It gives us recent earnings.
Mm-hmm.
It also kind of gives us the more subjective stuff, like analyst opinions, both from the bullish side and the bearish side.
Yeah.
So I think it makes it, much more interesting and nuanced and gives a better understanding of the company as a whole.
Absolutely. So I think a good place to start with a company that's as massive as Microsoft
Right.
is with their stock price.
Mm-hmm.
Currently sitting at $443.57.
Okay.
Now, that may sound pretty pricey to some people,
Yeah.
but Morningstar actually gives it a fair value estimate of $490.
That's interesting. And that's something that really catches the eye, right?
Yeah.
Because that discrepancy right there already is telling you that they think it's undervalued. And it has a market cap of $3.3 trillion.
Yeah, that's massive.
So that potential upside is really remarkable.
It is. But before we get ahead of ourselves,
Yeah.
let's take a closer look at these recent earnings.
Okay.
The report highlights a note from senior equity analyst Dan Romanoff,
Okay.
dated October 31st, 2024.
All right.
And he maintained his fair value estimate,
Mm-hmm.
even though Microsoft's guidance was a bit mixed.
So that tells you something about the confidence in their long-term prospects.
Yeah.
They also point to their strong performance in the September quarter with a 16% year-over-year revenue growth.
Right.
And apparently the demand for their AI solutions has been really impressive.
16% growth is nothing to sneeze at.
No, it's not.
But it seems like everybody's talking about the cloud these days.
Yeah.
And this report is no exception.
Right.
Microsoft's strategy really hinges on that transition, doesn't it?
Oh, it absolutely does. I mean, Azure, which is their cloud platform,
Yeah.
we're not talking about some small side project here.
Right.
This is estimated to be a $75 billion business, growing at a rate of 30% in fiscal 2024.
Wow.
One of the things that makes them so successful is its ability to create these seamless hybrid cloud environments.
Okay, so break that down for me. What does that actually mean for companies who are maybe a little hesitant to jump all in on the cloud?
Yeah, so you can think of it as like a bridge.
Okay.
So companies can keep some of their operations, on premises, but they can gradually shift more and more to the cloud as they get comfortable.
Mm-hmm.
So it allows them to move at their own pace, which is really appealing to businesses
Yeah,
who have complex systems, and they don't want to just jump in all at once.
right.
It's a really smart strategy by Microsoft leveraging, their existing dominance to ease that transition.
Yeah. It sounds like they're not putting all their eggs in one basket, though. They're also transforming their traditional software products,
Right.
like Office and Dynamics,
Mm-hmm.
into these cloud-based solutions.
Yeah.
Is this what they call SaaS?
Exactly.
Okay.
Software as a service.
Yeah.
And the good news for Microsoft is that transition is well underway. They're past the halfway point, which means it's no longer a financial drag.
Okay.
It's actually driving a lot of growth.
So we also can't forget about gaming.
Oh, yeah.
The report mentioned their acquisition of Activision back in October 2023.
Huge.
That was a big shakeup in the industry.
It was a really big deal.
So with Activision under their belt,
Yeah.
they're in a much stronger position in the gaming market.
Almost every corner of it.
Yeah.
You got the traditional consoles through Activision,
Mhm.
PC gaming through Blizzard,
Right.
and even mobile gaming thanks to King
Yeah.
and their insanely popular Candy Crush franchise.
I think that was a really smart move.
Oh, yeah.
Getting a mobile gaming giant like King on their side.
Yeah.
I mean, mobile gaming is exploding.
Yeah.
And this just gives them this massive new audience.
Instant access. Yeah. And we can expect to see them, rapidly adding Activision content to Game Pass,
Right.
which is their subscription service. And that's just going to make it more attractive to subscribers.
So it sounds like there's a lot of potential for growth across different areas of their business.
Yeah.
But what do the analysts have to say about their future? Are they all riding the hype train?
Well, there's always differing opinions.
Right.
But let's start with the bulls,
Okay.
the people that are, very optimistic about their prospects.
Okay. Lay it on me. What are the bulls saying?
So the bulls believe that, Microsoft is poised to dominate the public cloud market with Azure. They see continued growth in Microsoft 365, particularly the higher priced versions,
Right.
with all the bells and whistles. And of course, they point to Microsoft's near monopoly in operating systems and office software as a consistent cash cow.
Okay, that all sounds pretty compelling.
Yeah.
But what about the other side of the coin? What are the bears saying?
Yeah.
Are there cracks in this seemingly impenetrable armor?
Well, there's always skeptics, and they do raise some valid points.
Right.
They're concerned about the slowing momentum in the shift to subscriptions,
Okay.
particularly for Office.
Mm-hmm.
They point out that Microsoft's mobile presence outside of gaming is relatively weak.
Okay.
And then there's the fact that they're still trailing behind Amazon's AWS in the cloud market.
Yeah.
So, those are definitely things to consider.
Yeah, I mean, it's a good reminder that, even for a company as massive and successful as Microsoft,
Yeah.
there's always challenges and potential pitfalls. It's never a guaranteed win.
Exactly. It's important to keep in mind that no company, no matter how powerful,
Right.
is immune to competition and the ever-changing dynamics of the market. So, while the bulls might paint a very rosy picture, the bears remind us to, approach every investment with a healthy dose of caution.
Right. So where does Morningstar land in all of this?
Yeah.
They seem to have a pretty strong opinion on Microsoft's competitive advantage,
Yeah.
referring to something called a wide economic moat.
That's a good one.
Can you explain what that even means?
Yeah. So basically what they're saying is that Microsoft has a significant competitive advantage that will protect its profitability for a long time. And this wide economic moat rating is based on three main factors.
Okay.
Switching costs, network effects, and cost advantages.
Okay. I'm intrigued. Let's break down each of those, starting with switching costs.
Yeah.
What makes them so important?
So imagine you're running a large company.
Okay.
And you've been using Microsoft products for years.
Mm-hmm.
Your entire system is built around them.
Right.
Switching to a different provider would be a logistical nightmare, right?
Yeah.
That's the power of switching costs.
I see. It's not just about the price of the new software,
Right.
but the disruption that it would cause to your entire business operations.
Exactly. The deeper Microsoft's products are embedded in a business, the higher those switching costs become. And it creates a powerful incentive for companies to stick with what they know.
Right.
Even if a competitor comes along with a shiny new product.
Makes sense. So what about network effects? How do those play into Microsoft's dominance?
Well, think about Office 365.
Okay.
Millions of people use it, and there's this huge ecosystem of third-party applications and plugins that work seamlessly with it.
Right.
That network of users and applications makes it incredibly valuable, both for Microsoft and for the people using it.
So it's like a snowball effect.
Pretty much.
The more people use it, the more attractive it becomes,
Yeah.
and the harder it is for somebody else to come in and take over.
You got it. And LinkedIn is another great example.
Okay.
It's the go-to platform for professional networking.
Right.
Because everybody's on it. It's that network effect that makes it so difficult for any other platform to compete.
Okay, so we've covered switching costs and network effects.
But
cost advantages. What does that mean in the context of a company like Microsoft?
Well, think about it this way. Microsoft has this massive infrastructure and resources.
Right.
And they can spread the cost of research and development data centers marketing over a much larger customer base than smaller companies.
So they can offer competitive prices while still maintaining healthy profit margins.
Exactly. It's economies of scale.
Right.
The bigger you are, the more efficiently you can operate.
Makes sense.
Which makes it very difficult for smaller players to compete on price.
It's fascinating how all these different factors come together to create this economic moat that gives Microsoft such a strong position in the market. But I'm also curious to know more about their financial outlook. What's Morningstar predicting for their future?
Well, they're projecting a 5-year revenue CAGR of about 13%.
Wow.
Which is driven by, you guessed it, Azure Office 365, Dynamics 365, LinkedIn, and AI.
13%. That's impressive.
Yeah.
So it sounds like they're expecting continued strong growth across the board.
Yeah.
But they're not anticipating smooth sailing all the way, are they?
Well, no.
The report did mention some potential margin pressure.
Right. They do expect operating margins to increase to 46% by fiscal year 2029. But there's going to be some pressure in fiscal 2025.
What's causing that pressure?
So they're anticipating some accounting changes.
Okay.
The cost of integrating Activision and the investments they're making in Azure capacity to keep up with demand.
So it sounds like more like growing pains than signs of trouble on the horizon.
Yeah, I think that's a good way to put it.
Yeah.
These are the kind of short-term challenges that companies face when they're expanding and innovating.
It's a good reminder that even the most successful companies
Yeah.
face hurdles along the way.
For sure.
Speaking of hurdles, what are the risks and uncertainties that Microsoft might encounter down the line?
Yeah.
I mean, every business has them.
Of course.
But I imagine with a company as large as Microsoft, the stakes are even higher.
Yeah, absolutely. And the report highlights a few key risks that are worth considering. One of the big ones is maintaining revenue growth in their cloud products while legacy revenues decline.
That makes sense as more and more companies embrace the cloud.
Right.
That traditional software licensing business is going to shrink.
Yeah.
They need to make sure that that growth in the cloud is making up for those losses.
Exactly. It's a delicate balancing act.
Right.
They need to keep investing in their cloud offerings while still supporting their legacy products. And they need to do it without alienating their existing customer base.
Yeah, it sounds like a tightrope walk. What other risks do they need to navigate?
Well, there's always a risk that a large acquisition like Activision won't live up to expectations. Integrating a company of that size is a massive undertaking.
Yeah, there could be cultural clashes,
Yeah.
integration issues, or maybe the anticipated synergies just don't materialize.
Right. It's a gamble.
Yeah. Even when you're a company like Microsoft.
And of course, there's the fierce competition in the cloud market. Amazon's AWS is still the dominant player, and Google Cloud Platform is gaining traction.
So they can't afford to just rest on their laurels.
Yeah.
They have to keep innovating and coming up with new products and services to stay ahead of the game.
And they need to do it while managing costs and maintaining profitability.
Right. It's a complex equation.
Yeah, it is.
Are there any other potential risks that keep you up at night when you're thinking about a company like Microsoft?
Well, one that always looms in the background is the threat of data breaches.
Oh, yeah.
As Microsoft stores more and more data in the cloud, they become a bigger target for hackers.
That's a scary thought. A major data breach could really damage their reputation.
Oh, yeah.
Cost them millions. Not to mention erode the trust of their customers.
Absolutely. It's a constant battle to stay ahead of the bad guys.
Right.
And protect that valuable data.
So even with a wide economic moat and a positive outlook, it's clear that Microsoft is not without risks. It's a reminder that no investment is ever completely risk-free.
Right.
No matter how promising it might seem.
That's an important point.
So let's shift gears a bit and talk about how Microsoft manages its finances.
Okay.
Morningstar gives them an exemplary rating for capital allocation.
That's pretty good.
Which sounds pretty impressive.
Yeah.
What does that tell us about their approach?
So essentially what it means is they're making smart and responsible decisions about how they're using their financial resources.
Okay.
And Morningstar highlights their balanced approach, which includes reinvesting in the business, paying dividends to shareholders, buying back shares, and making strategic acquisitions.
Okay, let's break that down a bit. Starting with reinvestment, where are they focusing their efforts?
So they're pouring billions of dollars back into the business, primarily in key areas like cloud computing, AI, and gaming.
Okay, so they're planting seeds for the future, making sure that they can stay ahead of the competition.
Exactly.
And come up with those new products and services that everybody wants.
Yeah, but, it's not all about reinvestment.
Right.
They're also committed to, sharing their profits with shareholders.
Right.
Through dividends. And their dividend has been steadily increasing over the years.
Okay.
Which is a good sign for investors that are seeking a reliable income stream.
So they're striking a good balance between investing for the future and rewarding their current shareholders.
Yeah.
That's a good approach. But what about share buybacks? How do those fit into the picture?
So share buybacks are another way they return cash to shareholders.
Okay.
And when a company buys back its own shares, it reduces the number of outstanding shares, which can increase the value of the remaining shares.
So it's like they're making the pie smaller,
yeah,
but each slice is more valuable.
You got it. And it can be a signal that management believes the company's stock is undervalued.
Right.
They're basically putting their money where their mouth is.
Okay, that makes sense. And then, of course, there are those strategic acquisitions like the one we discussed with Activision.
Right. Acquisitions are a way for them to, expand into new markets, acquire new technologies, and potentially eliminate competitors.
Yeah.
When done well,
right,
they can be a significant driver of growth.
So it sounds like Microsoft is firing on all cylinders when it comes to capital allocation.
Yeah.
They're investing wisely, they're rewarding their shareholders, and they're making strategic moves to strengthen their position in the market.
And it's all underpinned by a very strong balance sheet.
Right.
With a net cash position.
Yeah.
This gives them a lot of financial flexibility to pursue their growth ambitions without putting their stability at risk.
That's reassuring to know that they're in such a solid financial position.
Yeah.
But before we move on, can you explain this concept of fair value that Morningstar keeps mentioning?
Yeah.
It seems to be central to their analysis.
Yeah, it's a core principle of their investment philosophy.
Okay.
And the idea is that every asset has an intrinsic value. And that value is based on the present value of all the future cash flows that that asset is expected to generate.
So in the case of a company like Microsoft, those cash flows come from, their operations, their sales, their profits, their investments.
Exactly. And Morningstar analysts take all of that into account.
Right.
They analyze, the company's financials, its competitive position, its growth prospects.
Okay.
To arrive at an estimate of its fair value.
And they use that estimate to determine whether the company's stock is currently undervalued.
That's right.
Or overvalued in the market.
And in Microsoft's case, their fair value estimate is $490 a share.
Right.
Which is higher than the current market price.
Right.
So that suggests that Morningstar believes the stock is currently undervalued.
So that potential upside we talked about earlier is based on this idea of fair value.
It is.
It's fascinating how they use this concept to make investment recommendations.
It's a really helpful tool for investors.
Right.
It provides a benchmark for evaluating a company's stock price and making, more informed decisions.
It's not a crystal ball.
Yeah.
But it's a valuable piece of the puzzle when you're trying to figure out if a company's a good investment or not.
For sure.
Now let's talk about what's driving Microsoft's profitability.
Right.
What are the key factors that are contributing to their success?
Well, one of the most important factors is the continued growth of their cloud business.
Yeah.
Azure is the crown jewel of their cloud offerings.
Okay.
And it's generating billions of dollars in revenue.
It seems like the cloud is like the golden goose.
Yeah.
For so many tech companies these days.
It is.
What makes it such a profitable business model?
Well, once you've built the infrastructure, the marginal cost of serving additional customers is relatively low.
Okay.
So this allows Microsoft to generate significant profit from its cloud operations without having to invest heavily in physical products.
It's a high-margin business, which is music to the ears of any investor.
Yes, it is.
What other profit drivers are contributing to Microsoft's success?
Well, the shift to subscription-based models for their software products is another key factor. Office 365, for example, is now sold as a subscription service. Right. And this provides a more predictable and recurring revenue stream for Microsoft.
So it's the gift that keeps on giving.
Exactly.
It's not just a one-time sale.
Right.
They're building a long-term relationship with their customers.
And it allows them to capture more value from those customers over time.
What about their gaming business?
Yeah.
With the acquisition of Activision, they're a major player in the gaming industry now.
Yeah.
How's that contributing to their bottom line?
Well, gaming is a high-growth, high-margin business.
Right.
And it has the potential to generate significant profits for Microsoft.
Right.
And with their diverse portfolio of gaming platforms, from consoles to PC to mobile, they're well positioned to capture a large share of the market.
So they've got their fingers in every pie.
Pretty much.
And they're doing it well.
Yeah.
They have a strong track record of innovation. They're making smart investments.
Yeah.
And they're generating healthy profits.
And they're doing it all while maintaining a strong financial position.
Right.
They have the resources and the expertise to navigate the challenges ahead and continue to grow their business.
It's impressive, to say the least.
Yeah.
But before we wrap up this first part of our deep dive, I want to touch on something that's becoming increasingly important for investors.
Okay.
Sustainability.
It's definitely top of mind for a lot of investors these days. They want to know that the companies they're investing in are operating responsibly, ethically, and with a focus on minimizing their environmental impact.
So how does Microsoft stack up in the sustainability department? Are they taking concrete steps to address these concerns?
They've actually been recognized for their efforts in this area. They've set ambitious goals for reducing their carbon footprint and are investing in renewable energy sources.
That's encouraging to hear. Are there other areas where they're demonstrating a commitment to sustainability?
Yeah, they're also working to promote diversity and inclusion within their workforce and are supporting initiatives to address social issues.
Okay.
So they're taking a holistic approach, which is what investors are looking for.
It's great to see a company like Microsoft using their platform and their resources
Yeah.
to make a positive impact on the world.
It's a win-win, you know? They're doing good for the planet and for society. Yeah. And they're also, strengthening their brand reputation and attracting investors who value those principles.
It makes you feel good about investing in a company.
Yeah.
When you know that they're not just focused on profits.
Right.
But also on, making the world a better place.
Absolutely. It's about finding companies that align with your values and your vision for the future.
Now, before we move on to the next part of our deep dive, I want to talk about some of the emerging technologies that could impact Microsoft's future.
Right.
What's on the horizon that we should be paying attention to?
Well, one of the big ones is the metaverse.
Yeah.
It's a concept that's been generating a lot of buzz lately.
So this is essentially a virtual world.
Yep.
Where people can interact with each other and with digital objects.
Right.
It's like a more immersive version of the internet.
Exactly. And Microsoft is investing heavily in the metaverse.
Okay.
They see it as a potential extension of their existing gaming and collaboration platforms.
It's fascinating to think about the possibilities, but it's still early days.
It is.
It's really hard to say how it will all play out.
Right.
What other emerging technologies are on their radar?
Another one that's really exciting is quantum computing.
Quantum computing.
Yeah.
That sounds incredibly complex.
It is, but it's a new type of computing that harnesses the power of quantum mechanics.
Okay, what's the big deal about it?
Well, it has the potential to revolutionize a lot of industries.
Okay.
Including healthcare finance and material science.
Okay.
It could lead to breakthroughs in drug discovery, financial modeling, and materials design.
So is Microsoft involved in quantum computing?
They're actually one of the leading companies in quantum computing research.
Wow.
And they're developing quantum computing services through Azure.
Okay.
So they're definitely positioning themselves to be at the forefront
right.
of this technological revolution.
It's amazing how they're always looking ahead.
Yeah.
And exploring new frontiers. It makes you wonder what other groundbreaking innovations they'll be a part of in the years to come.
It's an exciting time to be following Microsoft's journey.
Well, we've covered a lot of ground.
Yeah.
In this first part of our deep dive.
For sure.
We've explored their financials, their competitive advantages, their risks and opportunities, and even peeked into the future of technology.
Yeah.
But there's still so much more to uncover.
Absolutely. We've only just scratched the surface.
Okay.
And in the next part of our deep dive, we'll delve deeper into their business strategy, their profit drivers, and what all of this means for investors like you.
I can't wait to unpack it all.
Yeah.
But before we move on, we would love to hear your thoughts.
Yeah.
What are your biggest takeaways so far?
Do
you have any burning questions about Microsoft?
Leave a comment below.
Yeah.
And let us know what you're thinking.
And if you're enjoying this deep dive, don't forget to like, share, and subscribe to Podcast Finance Daily.
Absolutely.
For more insightful explorations of the financial world.
We'll be back soon with part 2 of our deep dive into Microsoft.
Until then, happy investing.
So picking up where we left off, one of the recurring themes in this Morningstar report is Microsoft's remarkable ability to adapt and evolve.
Yeah, they've definitely had their share of challenges over the years.
Yeah. But
they always seem to come out stronger on the other side.
Their history with mobile is a perfect example.
Right.
They were late to the smartphone game.
Yep.
And their Windows Phone platform never really gained traction.
That was a tough period for them.
It was, but instead of giving up, they pivoted to providing software and services for other mobile platforms.
And that turned out to be a very successful strategy.
It did.
They recognized that the mobile world was bigger than just their own platform.
Yeah.
And they adapted.
Oh, they did.
And now with the acquisition of Activision, they're making a big push into mobile gaming.
Right.
Which is smart, considering how much the gaming landscape has shifted towards mobile.
It shows that they're paying attention to the market and are willing to make bold moves to stay ahead of the curve.
Speaking of bold moves, their focus on AI is another area where they seem to be betting big on the future.
Yeah, their partnership with OpenAI, the creators of ChatGPT, is a prime example. They're integrating AI into their products and services at an impressive pace.
And they're making those AI tools available to developers through Azure, which could really change the game for the entire industry.
It's exciting to think about the possibilities.
Yeah.
We could be on the cusp of a new era of productivity and innovation, all powered by AI.
But as with any new technology, there are also potential risks and challenges.
Absolutely. I mean, maintaining that rapid pace of growth in the cloud market is going to be a challenge.
Right.
Competition is fierce, and Amazon's AWS is still the dominant player.
And there's always the risk that some new technology will come along and disrupt the entire industry.
Yeah.
I mean, it's happened before and it's bound to happen again.
But that's the nature of the tech world. It's constantly evolving, and companies need to be agile and adaptable to survive.
And Microsoft seems to have a knack for that.
They do.
They've faced disruptions before, and they've always managed to come out on top.
All right, so let's shift our focus back to Microsoft's economic moat. You know that wide rating that Morningstar gave them? It's a testament to the strength of their competitive advantage.
So for someone who's considering investing in Microsoft, what does that wide economic moat actually mean for them?
Well, it means that Microsoft has a durable competitive advantage that will allow them to generate excess returns for many years to come.
Okay.
It's like a fortress protecting their profitability.
And those high switching costs we talked about earlier are a major part of that fortress.
Exactly. Once a company has adopted Microsoft's products, especially their enterprise software solutions,
right,
it's very difficult and costly to switch to a competitor.
And it's not just the financial cost either.
Right.
It's the disruption to their business operations, the need to retrain employees, and the potential for data loss during the transition.
All of those factors create a strong disincentive for businesses to switch, even if a competitor comes along and offers a seemingly better product.
It's a classic case of better the devil you know.
Yeah.
Companies are often willing to stick with what they have, even if it's not perfect, rather than risk the uncertainty and potential chaos of switching.
And the longer a company uses Microsoft products, the stronger that lock-in effect becomes.
Right.
Their systems become more deeply integrated, making a switch even less likely.
So it's like a self-reinforcing cycle.
It is.
Microsoft's dominance leads to high switching costs, which in turn reinforces their dominance.
Exactly. And then there's the network effect, which is another powerful force working in Microsoft's favor.
You mentioned Office 365 and LinkedIn as prime examples of that.
Yeah.
Can you elaborate on how the network effect benefits Microsoft in those areas?
Well, with Office 365, it's the sheer number of users and the vast ecosystem of third-party applications that make it so valuable.
Okay.
The more people who use it, the more attractive it becomes to developers to create applications and plugins for it.
Right. So that in turn makes Office 365 even more appealing to users.
Exactly.
It's a virtuous cycle.
It is a win-win situation for everyone involved.
And LinkedIn operates on a similar principle. The more professionals who use it, the more valuable it becomes as a platform for networking, job searching, professional development.
It's like a snowball rolling downhill, gathering momentum as it goes.
So switching costs and network effects are two major pillars of Microsoft's wide economic moat.
They are.
What about the third factor you mentioned, cost advantages?
So Microsoft's massive scale and its existing infrastructure give it a significant cost advantage over smaller competitors.
Okay.
They can spread the costs of research and development data centers marketing over a much larger customer base.
So they can afford to offer competitive prices.
Yeah.
While still maintaining those healthy profit margins.
That's right. It's a classic case of economies of scale.
Right.
Which is a powerful advantage in any industry.
So when you combine all of these factors, switching costs, network effects, cost advantages, it's clear why Morningstar is so bullish on Microsoft's long-term prospects.
They see these factors as creating a really formidable barrier to entry for competitors, which should allow Microsoft to maintain its profitability for many years to come.
But let's not forget that no company, no matter how strong its competitive advantage, is immune to risks and challenges.
That's true.
What are some of the potential headwinds that Microsoft might face in the future?
One of the key challenges they face is managing the transition from their legacy businesses to their newer growth areas like the cloud.
Right, as more and more businesses move their operations to the cloud.
Yeah.
Microsoft's traditional software licensing business is bound to decline.
And they need to ensure that the growth in their cloud business more than offsets those declines.
It's a delicate balancing act.
It is.
They also need to be mindful of the potential risks associated with their large acquisition.
Yeah.
Like Activision.
Integrating a company of that size is a complex and challenging process.
Right.
There's always a risk of cultural clashes, integration issues, or, just the acquisition won't live up to expectations.
And then there's the intense competition in the cloud market. Amazon's AWS is still the dominant player, and Google Cloud Platform is also gaining traction.
So Microsoft needs to continue to innovate and differentiate its cloud offerings to stay ahead of the competition.
Right. And they need to do that while managing costs and maintaining profitability.
It's a tall order, but they've certainly proven themselves capable in the past.
And, of course, there's always the risk of unforeseen events.
Of course.
Like a major data breach or a global economic downturn.
Yeah, those are factors that are difficult to predict or control.
Right. But they highlight the importance of having a diversified portfolio and a long-term investment horizon.
Okay, so shifting gears a bit, let's talk about Microsoft's capital allocation strategy.
Okay.
You know, that exemplary rating from Morningstar?
Yeah, that really stood out to me.
Yeah, it suggests that they're doing an excellent job of managing their financial resources.
Right.
They have a balanced approach that includes reinvesting in the business, paying dividends, buying back shares, and making strategic acquisitions.
And we talked about reinvestment earlier, and it's clear that they're committed to putting their money where their mouth is when it comes to growth areas like the cloud and AI.
But they also understand the importance of returning value to their shareholders.
Right.
And their steadily increasing dividend is a testament to that.
And their share buyback program shows that they're willing to return cash to shareholders when they believe their stock is undervalued.
Right. They're not afraid to make bold moves.
Right.
But they're also disciplined and strategic in their approach.
All of this suggests that they have a strong management team.
Yeah.
That's focused on creating long-term value for their shareholders.
And their strong balance sheet with a net cash position gives them the financial flexibility to pursue their growth ambitions without taking on excessive risk.
Okay, now before we move on to the final part of our deep dive, I want to circle back to the concept of fair value.
Okay.
You mentioned that Morningstar uses this as a key metric in their analysis.
Yeah, it's a fundamental principle of their investment philosophy. They believe that every asset has an intrinsic value, which is based on the present value of all the future cash flows that asset is expected to generate.
So in the case of a company like Microsoft, their fair value is essentially what they're worth based on their current and projected earnings.
That's a good way to put it, yeah.
Okay.
Morningstar's analysts carefully analyze a company's financials, its competitive position, and its growth prospects to arrive at an estimate of its fair value.
And they use that estimate to determine whether a company's stock is undervalued or overvalued by the market.
Exactly. In Microsoft's case, their fair value estimate of $490 per share suggests that the market is currently undervaluing the company.
So that potential upside we discussed earlier is based on this discrepancy between the current market price and Morningstar's estimate of fair value.
That's right. It's an important concept to understand when evaluating any investment opportunity.
Okay, now let's delve into the factors that are driving Microsoft's profitability.
Okay.
We touched on the cloud and subscriptions earlier, but I'd like to go a little deeper.
So what are the key things to understand about Microsoft's profit drivers is that they're increasingly focused on recurring revenue streams.
That's a good point. The shift to subscriptions for products like Office 365 is a prime example of that.
Instead of relying on one-time sales, they're building long-term relationships with their customers and generating predictable revenue over time.
And the cloud is another major contributor to this trend.
Yeah.
Azure's subscription-based model provides a steady stream of revenue
right.
that's only expected to grow in the years to come.
They're also benefiting from the growth of their gaming business,
right,
which is another high-margin recurring revenue stream.
So they have multiple engines driving their profitability,
yeah,
which is a good sign for investors.
And their strong financial position allows them to continue to invest in those growth areas and maintain their competitive edge.
It sounds like they have a well-defined strategy and the resources to execute it effectively.
Now, before we wrap up this part of our deep dive, I want to briefly address the issue of sustainability, which is becoming increasingly important for investors.
We touched on this earlier, but I think it's worth reiterating.
Yeah.
Investors are increasingly looking for companies that are operating responsibly and sustainably.
And Microsoft seems to be taking this seriously.
Right.
You know, they've set ambitious goals for reducing their carbon footprint and are investing in renewable energy sources.
They're also promoting diversity and inclusion within their workforce and supporting initiatives to address social issues.
Yeah, so they're not just talking the talk. They're walking the walk when it comes to sustainability.
That's encouraging to hear.
Yeah.
It's good to know that they're not just focused on profits, but also on making a positive impact on the world.
Okay, so let's turn our attention to some of the emerging technologies that could impact Microsoft's future.
Okay, we briefly discussed the metaverse and quantum computing earlier.
Yeah.
Can you elaborate on why these technologies are so significant?
So the metaverse has the potential to revolutionize the way we interact with each other and with the digital world. And it's a massive opportunity for companies like Microsoft that are already invested in gaming and collaboration platforms.
And quantum computing. could have a profound impact on a wide range of industries.
Yeah.
From healthcare to finance to material science.
It's a technology with the potential to solve problems that are currently intractable with classical computers.
Okay, so Microsoft is positioning itself to be a leader in these emerging fields.
Yeah.
Which could drive significant growth in the years to come.
But they're not afraid to embrace new technologies and explore new frontiers.
And that willingness to innovate and adapt has been a key driver of their success throughout their history.
Yeah. So as we wrap up this part of our deep dive, I want to emphasize that investing is a journey, not a destination.
That's a great point.
It's not about finding the perfect stock or timing the market perfectly.
Right.
It's about continuously learning, adapting, and making informed decisions based on your individual goals and risk tolerance.
And it's about having a long-term perspective.
Right. The stock market is volatile in the short term, but over the long term, it tends to reward companies that are well managed, financially sound, and focused on growth.
And based on what we've discussed today, Microsoft seems to fit that description quite well.
Of course, it's up to each individual investor to do their own research and make their own decisions.
All right.
But I hope this deep dive has provided you with some valuable insights into the future of Microsoft and the world of investing in general.
Yeah, we've covered a lot of ground, but there's still more to come.
Right. In the final part of our deep dive, we'll tie everything together and explore what it all means for you as an investor.
Okay.
We'll also answer some of your burning questions and leave you with some food for thought.
Awesome. So stay tuned for the exciting conclusion of our deep dive into the future of Microsoft. Wow, it's amazing how much we've covered already.
I know, right?
We've talked about Microsoft's financials, their competitive landscape, even emerging technologies like the metaverse and quantum computing. It is. But I think what really sticks out to me is their ability to adapt and evolve.
Yeah.
You know, they went from dominating the desktop world to making this huge push into the cloud AI and gaming.
Yeah.
It really makes you wonder, what they'll conquer next.
That's what makes analyzing a company like this so interesting.
Right.
It's not just about where they are today, but trying to predict where they'll be in 5, 10, even 20 years.
Right.
And that's where I think the real excitement is for investors.
Yeah, it's like we're trying to predict the future.
Kinda.
But we do have some clues.
Yeah.
We've talked about their investments in the cloud, their acquisition of Activision, their partnership with OpenAI. Those are all pretty clear indicators of where they see things headed.
Yeah, and let's not forget the wide economic moat that Morningstar keeps bringing up.
Right.
I mean, that's not something that just disappears overnight. It suggests that they've really built a fortress around their business, and it's going to be really hard for competitors to dislodge them.
That's comforting for someone who might be thinking about investing in them.
Yeah.
But even with a wide moat, there are always risks, right?
Absolutely. We've talked about some of the challenges they face, managing that transition from legacy businesses to the cloud, navigating those complexities of these huge acquisitions, staying ahead of the competition in this super rapidly evolving market.
Right.
And then there's always the chance of something totally unexpected.
Right, like a cyber attack or a global economic downturn.
Exactly. Things that are really difficult to predict or control.
It's a good reminder that no investment is ever completely risk-free.
Yeah.
No matter how good it looks.
True.
But I think what we've learned today is that Microsoft is a company that's not afraid to take risks, to innovate, to adapt to all these changing circumstances.
Yeah. And they have a history of success to back it up.
They do.
They've faced plenty of hurdles in the past, but they've managed to overcome them and come out even stronger on the other side.
Right.
And I think that track record is something that investors can be pretty confident in.
So before we wrap things up, I want to bring it back to our listener.
Yeah.
You sent us this Morningstar report because you're trying to decide if Microsoft is a good investment for your portfolio.
Right.
So what are some of the key takeaways you should keep in mind?
I think the most important thing to remember is that Microsoft is a company in transition.
Okay.
They're moving away from that traditional software licensing model to these cloud-based solutions. AI and gaming.
Right.
And that transition comes with both risks and opportunities.
So it's not a guaranteed win.
No.
There are definitely some things to think about.
Yeah, and it's important to think about your own investment goals and your risk tolerance.
Right.
Are you looking for a stable company that pays dividends?
Right.
Or are you okay with taking on a bit more risk for potentially higher returns?
Yeah, because Microsoft kind of offers both.
It does.
They've got that history of paying dividends.
Yeah.
But they're also investing heavily in these growth areas that could lead to their stock price really going up.
Yeah. And we can't forget about their commitment to sustainability.
Right.
That's something that more and more investors care about, and it's clear that Microsoft is taking it seriously.
Yeah, it's not just about making money anymore.
Yeah.
It's about investing in companies that align with your values and that are working to make the world a better place.
Right.
And it seems like Microsoft is doing that.
So if you're looking for a company with a proven track record, a strong financial position, and a forward-thinking strategy, Microsoft is definitely worth considering.
But as always, it's important to do your own research.
Yeah.
Maybe talk to a financial advisor.
Mm-hmm.
And make sure you're making the right investment decisions for you.
We've given you the information and the insights to make an informed choice.
Right.
Now it's up to you to weigh the pros and cons and decide if Microsoft is right for your portfolio.
Investing is a journey, not a destination.
That's a great way to put it.
It's all about constantly learning and adapting and making smart choices that will help you reach your financial goals.
Well said.
And we hope this deep dive has given you a better understanding of Microsoft and what the future might hold for this giant of the tech world.
It's been a fascinating journey.
It has.
And we appreciate you coming along for the ride.
Before we sign off, we would love to hear from you.
Yes.
What are your thoughts on Microsoft's future?
Mm-hmm.
Do you think they're a sure bet?
Yeah.
Are there any potential problems that worry you?
Leave a comment below and tell us what you think.
Yeah, and if you enjoyed this deep dive into Microsoft, don't forget to like, share, and subscribe to Podcast Finance Daily for more insightful explorations of the world of finance.
Until next time, happy investing.